Hello everyone, this is Mohammad Akif with Akif CPA, and today we'll be discussing what is the difference between profit and cash flow. It's very important to understand that profits are not as the same as cash flow. A lot of people, and don't understand it or understand it in a completely different way. So we'll be discussing that in this video today. I do want to point out that we do have some other videos. If you're having problem with any accounting, with bookkeeping, cleanup on monthly basis, or you're behind for many years, we can help you. We are been doing this for a very long time. We understand the complexities, the issues that come with when you are behind, or when you have not done it on timely basis or on in a better manner. So again, if someone has done something wrong in your books, or that you hired someone that they were not able to deliver, we can deliver for you. So reach us out at info@akifcpa.com, and we can definitely help you again. So let's get started. On this, I'm going to share my screen with you guys so you can see what we're seeing, and I'll show you what do I mean by profit versus cash flow. Why is it different? All right, so let's start. Okay. Perfect. So you can see my screen. So let's go towards, let's go to profit statement. And then we can do this here. I think we can do this here. And then we can pick cash basis. All right. So you can see right now, so this is one of the demo books, and we can see how much income came in, what were the expenses, and as of right now, it shows as $419 in profit. So do we think that we have this amount in our bank account or not? So let's go to our balance sheet to see if we have that amount, right? Or is the amount less or more? Let's go to balance sheet. We did cash basis. So oh wow, so we have 61,000, right? And then I'll tell you why. So we look, right here, it shows us that our current year earning or net profit is only $419.93. But in our cash, it shows us 61,000. How is that possible? That is possible because we have cash coming from prior years, or cash that came in that was not part of the profit. So what do we mean by cash that came in with not part? I'll go into detail later on this video. But cash coming from prior years. So that's technically, let's say profits that you had in your previous years. So, we're looking at 2025. So, profits could be coming from 4, 24, 23, 22, 21, and 20. It could be as far as you can go in your company, whenever the company was established. And then, so if the profits are adding up, this is profits, right? So if it was a loss, then the cash will be going down. So because this company has more cash, there could be multiple reasons. One reason is that we can see, in this particular case, we can see this company has profits. And that's the reason the cash is much higher than the net income for that year. Because the net income is only $400 something, but the cash is $61,000. So how are we looking at this, right? Again, we can tell by the report this company has been making money, and then from previous years had 59,000 to carry forward into 2025 from 2024. I can see that, and then so that's the reason the cash is much higher. Second reason your cash will be higher will be that, for example, you didn't make enough profit, but you took out a loan, right? So the loan came in and then made your cash go up, but that doesn't mean your profit went up. It just means your cash went up. So that's one of the biggest differences between when we talk about profit and when we talk about cash flow. And then when we talk about the health of the company, we're looking at not only the profit, but we're looking at the cash flow too, because cash keeps your operation running. right? It keeps your business going. So you could be making money, but if you're taking out funds and using them on some other projects or for your own personal use, you are taking the cash away from the company. And then so when a lender is looking at these reports, they're looking at, hey, this company is making this much money, but for example, there's no cash. I mean, the cash is going somewhere. Either they have a big debt payment, the loan that they have taken, or they're investing into something, number two, or the owners are taking the money out, either through distributions, through draws, through dividends, you name it. So these are all the reasons your cash could be different from your profit. And then so your profit doesn't necessarily mean this is the same amount of cash you might have in your bank account. So your profit could be $1 million, and then you're going to only have 100,000 in your bank account. So where did the 900,000 go, right? And then this is where we have to figure out why there's a difference. So in this case that we are looking at, they had retained earnings, they had net profits from previous years, where they were able to carry forward. They did not use the cash in any way, and then so they were able to keep the cash going, and that's the reason the cash is much higher. So again, profit is it's only on year-to-year basis. What do I mean by that is that 1 year to another year, the profit can change, right? It gives you a snapshot of a time period within, and then the profit is within that time. But the cash flow can be carried forward from year to year to year to year. So these are one of the main differences. Again, it's all about where the funds are being used, how the funds are being used, and if they're being kept, right? So profit could be lower, but your cash could be higher. And when we talk about, so when the lenders are talking about profit versus cash, they're talking about, is this company profitable, meaning that they're making money? At the same time, do they have enough cash to keep the operations going, to keep the capital flowing into other investments, into debt, and then to make payments, right? So this is one of the biggest difference between profit versus cash flow. So if you have an email, shoot us an email, info@akifcpa.com. We'll be gladly able to help you. Take care. Thank you.